Maxi. Future Capital Holdings came out with numbers, a quick highlight there. You've got a good set of numbers that they've posted. PAT came in higher by about 290% from 10 crores on a year-on-year basis to 29 crores. The provisioning increased this time around along with the total expenses, but the overall income also grew equally well. About 112% on a year-on-year basis was the total growth in income. We got the management joining us. Mr. V. Vaidyanathan, the Vice Chairman and Managing Director at Future Capital Holdings, joins us on the show right now. Vaidya, thanks very much for joining in. You want to run us through the quarter and the highlights?
Well, the key highlights were the growth in the loan book. The loan book is now 4,250 crores, up from 2,855 crores beginning of this year. The second big highlight is that we got an upgrade in our rating, which we are really very happy about. We were an A+ company until last year. We have now got upgraded to AA-, which actually represents our very strong structural liquidity. Structural liquidity meaning our ability to repay on the basis of cash flows from customers is actually strong, very strong because of the low NPA numbers as well. So that's the second big highlight. The third factor is, of course, growth in the profits. Profits are up from 10 crores last year, same time, to about 29 crores this year. We also feel it's quite a sustainable sort of a performance because the core income, which drives this profit, is what has actually gone up. What we call core income, the net interest income plus fees, that has actually grown from 108 crores to 255 crores. So we feel it's kind of sustainable.
Whether you want to you come in on the advances, a big jump in advances also is what you've seen, 80%. Aside of that, retail portfolio, could you throw some more light on the retail portfolio performance?
Actually, the big jump in growth, a big jump in the loan book itself actually has come from the retail side. Last year, our retail book was just about 700 crores. Now it's close to about 2,000 crores. And that really is the big driver of growth. There, 90% of our business is mortgages, so that's doing really very well. And the balance is gold loans. So that's the rough cut of what's growing on the retail side.
All right. Any concerns on the asset quality?
Not really. You could see our numbers, they're quite comfortable, we're as good as nil. But even on an ongoing basis, I think that even for the industry as such, the concerns are a little exaggerated, I would say, because if you notice now the interest rates tending to coming down over the next year, certainly liquidity coming in the big way after the CRR cut, and sentiment returning, I would actually say we're a little more hopeful that not only for us, but even for the industry, things should stabilize from here. I don't think it's as big a concern as we thought maybe even 6 months ago.
The margins have remained steady, Vaidya, but the likelihood of sustaining them at around 5% levels?
That shouldn't be an issue, actually. My sense is actually that with or without RBI cutting repo rates maybe in the next policy or the one after, chances are that the banking system will start dropping interest rates maybe a bit ahead of RBI doing its policy rates. That could also be because credit growth is kind of constrained, and secondly, of course, liquidity will be back after the CRR cut. Therefore, I feel that if anything, borrowing costs should come down, and of course, we will also pass it on to our customers. So all told, I think margin at about 5.2%, 5% is safe to extrapolate.
Any update on Pantaloons offloading this stake?
Well, maybe on a public platform, they have described that they will look at divesting partly or wholly, depending on market conditions, and that's what probably you're referring to. But beyond that generic statement or a statement of intent, I think all the reports are at this point of time, I should call them speculative, because no real progress is there at this stage for any significant reporting.
Just one last word, Vaidya. If you could probably give us a bit of a guidance into the entire fiscal as to the performance and top line and bottom line. And then again, any new business areas that you want to venture into that you're looking at right now?
Well, as far as business lines are concerned, certainly apart from the lines of business we talked about, mortgages and gold loans, we are focusing on the two-wheeler loans in a significant way, and of course durable financing. We feel that these are lines of businesses which give us adequate margin, plus in a way are underpenetrated in the significantly underpenetrated in India. And of course we are also grown our wealth management business substantially, which is actually reflecting in the fee income numbers that you are beginning to see now. And that is over and above what we do on the wholesale side. Now, as far as our guidance for the year is concerned, I'd put it like this. Our earnings per share last year was about 7.5. I think it's safe to assume an earnings per share of about 15 or a little more than that. That'll probably be double over the last year. In terms of return on equity, last year our return on equity was 6%. Now our exit return on equity for this year is, or for this quarter, for the last 2 quarters, is actually in excess of 14%, about 14.5%. So we now feel that on a structural basis we are doing well, and I think this is what investors should get to expect from us and probably improve upon this in the year to come.
I'm sure they're expecting a lot. Vaidya, thanks very much for joining in, and best of luck for the coming few quarters as well. That's Future Capital Holdings on the Q3 numbers. Taking a very short break right here. We've got Manishi Chaudhary on the other side joining us. Stay